Hi, and welcome again to another edition of the market analysis for today, March the 7th. I'm Giovanni Benacour, trader, operator, and educator with Advantage Markets. Well, the data will speak louder than Powell. The Fed rate is veering towards the 6%. When Federal Reserve Chairman Jerome Powell speaks to Congress over the coming 2 days, he will probably say once again that the outlook for the interest rates depends on coming data. Beyond that, Powell might say that policymakers can slow down the pace of rate hikes to access the figures as they arrive. At the February 1st decision, a quarter-point hike was agreed upon. That follows six increases of a three-quarter point or a half point. Expectations are for another quarter-point hike this month. The chances of a half-point move are higher, are rising. The last dot plot put the terminal rate, the point at which the hikes can stop, at as high as 5.25%, compared with 4.5% to 4.75% where we are now. That prediction was made when everyone expected the data to show a significant cooling in inflation and economic growth. But so far, that's not what the data has said. Non-farm payrolls jumped in January. Retail sales blew out expectations. The inflation rate is running at 6.4%, better than double-digit figures from last year, but still way higher than normal. The Fed's preferred measure, the personal consumption deflator, minus food and energy, is more than twice as high as the Fed would like to see it. Now, there's a perfectly good chance that recent economic outperformance is either an anomaly or a product of seasonal adjustments. But if you listen to the data right now, the numbers are saying the Fed needs to move much higher, perhaps above 6%. And with that being said, so let's take a look at what we can expect out of the markets for today. The market fluctuation. Well, we saw yesterday how the Nasdaq had opened up and rallied to the upside and quickly gave back all those gains to really close where we opened up. So that would be a flat day for us for traders. But today we have opened up with a gap up on the Nasdaq. Our size it is pointing higher than 50, and we are far away from being overbought. So another chance of reaching that 12.5 resistance level is on the card, on the deck today. So we could probably revisit that high today. Long the equities, the indices. So here we have the S&P 500 as well. Also, same fluctuation, gap up, not as marked as in the Nasdaq, but however a gap up. So going long on the S&P. The one that is looking also flattish is the Dow. The Dow has really been the one lagging between the other indices, but nevertheless, we are above the 21-day period moving average. The RSI, however, is flattish right around 50, so we want to obviously receive that impulse or that momentum to the upside. We'll revisit this high of 33,585 today. That will be the highlight of today. So I am long indices. Here we have crude oil. Crude oil has been moving higher. Yesterday, however, the fluctuation did trade lower, almost hitting our support of $78, but quickly retraced and closing higher. Today we have opened up with a gap up, but it has been closed, and now the market is looking for participants. Perhaps it is a good time to come in and take some positions off on crude oil. So I am long on crude oil. Now, could this just be another profit-taking scenario where the market just continue to move lower towards the 78 marker? That could also be a probability. But with the momentum of the demand, I am thinking that the $80 marker will be revisited today. As far as Nat Gas goes, Nat Gas, I'm out on Nat Gas. Is not, there's not much volume in Nat Gas. It's just really low trading, so I am out of it. I'm still thinking it's going to be above 240, in that range, between 240 and 288, 280. So that's a 40-cent range. That's a very tight range. So we have here gold, which has opened with a gap down. So that hasn't been closed. So how much lower would it go? I'm putting 1820 to see if it will find some participants here, or perhaps 1830 will be the case. However, I am waiting for the confirmation so I could come back in gold. But I am out of gold right now, as well as silver. I'm out of silver. And copper, copper is also looking flirting with that $4 support marker, psychological support level. So I'm looking at it, and I'm still saying that it will sustain it, it will hold, but it will be tested. So another move to the downside to retest that $4, and I'll be a buyer. Then we have Bitcoin, which has been really, really, really tight trading, very low volume. So I am out of it. I'm out of it. So euro is looking to step up 106.50, and it's just really looking to fight against the 21 moving average to trade above it, and that's the resistance that it's having right now. As far as the pound goes, it opened with a gap down. It hasn't been closed. So will it come down lower to 119.5? That will be the case as long as the dollar index helps, but it has opened with a gap up. So that the momentum to the upside, it has really put pressure on the other assets, and that will be the key level here to see if the dollar index will revisit the 105 level, or will it come back down to revisit that 104 flattish. But right now we're at 104.5 around that, and that fluctuation could probably continue throughout the day. So keep that in mind. Right, that's it for me today. Have a fantastic trading day. I'll see you tomorrow.